The UK's public finances are increasingly under strain, and there are growing concerns that this strain will start to weigh heavily on the pound. Government borrowing for June came in significantly higher than expected, hitting £20.7 billion. That's £6.6 billion more than this time last year, marking the second highest June borrowing since records began. So what's driving these numbers? Higher public spending combined with soaring debt interest costs. Interest payments alone reached a staggering £16.4 billion last month, almost double what they were just a year ago, mainly due to rising inflation impacting index-linked government bonds. All eyes are now on Chancellor Rachel Reeves, who faces growing pressure ahead of the autumn budget. She may need to find between £15 to £25 billion, primarily through tax hikes, to plug the fiscal gap. Potential measures include extending freezes on income tax thresholds, raising sin taxes on items like alcohol and tobacco, and tightening pension tax relief. So what does this matter for the pound? Well, rising government borrowing and potential tax increases dampen investor confidence, particularly when combined with weak economic growth. The UK economy contracted for 2 consecutive months recently, signalling trouble ahead. Investors fear further borrowing could push UK debt levels beyond the current 96.3% of GDP, levels not seen since the 1960s. This fresh bout of concern comes just weeks after the Chancellor was caught crying in Parliament, prompting a pronounced market reaction. And her challenges are deepening, with the fiscal gap widening amid sluggish growth and reversed welfare spending cuts. The risk for the pound is clear. Sustained fiscal strain could lead to reduced investor appetite for the UK assets, weakening the currency further. The longer-term outlook isn't much brighter. Persistent inflation and high borrowing costs are likely to keep pressure on public finances well beyond the autumn budget. The UK already faces some of the highest borrowing costs among advanced economies, meaning pressure on sterling could persist. With the Chancellor facing tough choices, markets will closely watch the autumn budget. Any missteps could further undermine confidence, placing even more pressure on the pound. Investors take note, volatility in sterling may only just be beginning.